Here the stop-loss algorithms and how to trade them is described. In literature, stop-loss nomenclature encompasses a wide range of algorithms. Here in 3D Conceiver, the stop-loss algorithms are always intended as level breakouts. Hence, a stop-loss level must be defined. The level depends upon the open position. If it is a long position, the level is below the price. If it is a short position, the level is above the price. The level is violated when the price goes below it during a long position or above it during a short position. If the level is violated, the stop loss is triggered, signaling a liquidate order, that is to close the position. All other types of algorithms asserting when to liquidate in 3D Conceiver are to be intended as liquidate algorithms, not stop loss, so they must be entered in the liquidate tabs of the composer. To view the implemented stop-loss algorithms, in the Composer tab select the branch Stop Loss. As usual, intraday algorithms appear in blue in the tree, and stop-loss algorithms make no exception. As usual, by selecting one of the stop-loss algorithms, a description appears in the bottom left pane. A brief introduction or definition comes first. The interpretation of stop-loss algorithms is straightforward, it just means they're triggered. The signal given by stop-loss in itself is always the same, liquidate. This is reported in the literature signals paragraph. If a stop-loss is based on a technical indicator, that indicator is pointed out in the Use Indicators paragraph, in form of links. Click the link to go to the description of the relevant indicator. Basically, all stop-loss algorithms require input parameters from the user. If the meaning or range of such parameters is not readily clear from the description or from the formulae, some elucidation could be reported in the Parameters section. The mathematical formula defining the stop-loss level is written in the Formulae section. This is the real definition of the algorithm. In the Boolean logic paragraph is reported when the algorithm is true or false. For the stop-loss, the logic is always the same. During a long position, it is triggered when the price goes below the stop level. During a short position, it is triggered when the price goes above the stop-loss level. Stop-loss algorithms can be inserted only in the stop-loss tab, so select it first. The tab is further divided into two sections, the top one called Stop Loss and the bottom one called Trading Algorithm. Stop-loss algorithms can be inserted only in the stop-loss section, so select the stop-loss of your choice in the tree. Then press one of the selection buttons in the stop-loss section. The stop-loss will appear in the corresponding logical slot. As basically all stop algorithms are active intradaily, the I label appears signaling that. If parameters are present for the algorithm, choose values you deem appropriate. Don't rely on default values, as there is nothing peculiar in them. For the majority of stop-loss algorithms, the same formula can be applied to calculate the initial stop-loss, that is when the trade is opened, and afterwards. Indeed, the formula usually might look like stop-loss equal price plus or minus something, where the plus sign is for short trades, the minus sign for long trades, and something depends on the algorithm. The initial stop-loss level will be calculated with the price the trade is opened at. For a trailing stop-loss, from a moment onward the same formula is applied using the current price. For each bar of the historical file, the same formula is evaluated again and the result is compared with the old level. When a long position is opened, the stop-loss level can track the price upwards. If the same formula for the current bar implies a higher level than the old one, that level will be the new stop-loss level. If on the contrary, the same formula for the current bar implies a lower level than the old one, the old value is maintained. The other way around for short positions. The majority of stop-loss algorithms can be trailing, that is, they can track or follow the price, upwards for long positions, downwards for short positions. If the stop loss can be trailing, the trailing checkbox is enabled and you can select or deselect it. If selected, the default, the stop loss level will have an initial level and then will follow the price. If unselected, the stop loss will only have an initial value, never changing. As said, trailing stop loss algorithms follow the price. See the previous formula. You can select exactly what price to consider in the dedicated pane Trailing Stop Loss Follows. You can choose among the following prices: Close, HL average, that is the average between high and low; Typical price, that is the average between high, low and close; OHLC average, that is the average between open, high, low and close; High for long, low for short; Low for long, high for short. Note that this is the price used in the calculation only for the trailing stop loss. The initial value of the stop loss is always computed with the price of the trade, that is the price the trade occurs at. The bottom section is dedicated to the standard elementary trading algorithms, the ones found in the following branches of the tree: technical indicators based, patterns, candlesticks. This has been designed so that stop-loss algorithms can be affected by some other conditions. The section is further divided into two subtabs: long, short. The stop-loss algorithms are combined with the long tab when the long position is underway, and with the short tab when a short position is opened. If you don't want to distinguish between long and short trades, deselect the checkbox Distinguish Long-Short. In this case, only one tab is enabled, both for long and short positions. So if necessary, select the standard trading algorithms and insert them in the bottom section. In order to watch stop-loss levels, in the charts window you must select the stop-loss checkbox in the plot pane. The colors of the curves are determined by the two buttons SL1, SL2 in the Colors pane. They are both customizable by clicking them. The curve is drawn only where the stop-loss exists, that is, when a position is open. If the last trading was a liquidate, the stop-loss does not exist and is not drawn. If you want to see where a stop-loss is triggered, the easiest way is just to watch the graph. If holding a long position, the stop-loss is triggered whenever the price is at or below the stop-loss level. If holding a short position, the stop-loss is triggered whenever the price is at or above the stop-loss level. You can also see when a stop-loss is triggered through the dedicated indicators. Take note of the position within the tab where you inserted the algorithms. In the Indicators tab, expand the Trading Algorithms branch and select the indicator corresponding to the position of the stop-loss in the Stop-Loss tab. The actual stop-loss can only be stop-loss 1, stop-loss 2. To see the logical combination of the whole tab, not only of the two stop-loss algorithms, select the Stop-Loss Combined indicator. Press the Select button to put the indicator into one of the indicator's slots. These indicators take on the value 1 where the stop-loss is triggered. The chart reflects the fact that stop-loss algorithms are evaluated intradaily. A stop-loss can be triggered at open, threshold and close independently from each other. For instance, for this candle the stop-loss is triggered at open, as well as for this other candle. For this candle, the stop-loss is triggered at threshold. If you want to watch the stop-loss algorithms in the table, you must select the stop-loss checkbox in the Composer pane. In the same pane, if you select the Only Tab Combine radio button, only the logical combination of the whole stop-loss tab, not only of the two stop-loss algorithms, is shown. If on the contrary you select the All radio button, even the single stop-loss algorithms are shown. Being defined intradaily, the table reports the data for the three instants in time: open, threshold, close. The only exception to that is when the stop loss is combined with elementary trading algorithms operating only at close, both for long and for short positions. In that case, the stop loss is first made congruent with those algorithms and forced to be active only at close, so only the closed instant in time will be shown. In any way, for each stop loss algorithm and for each instant in time, two columns are present. Triggered, it is in the form of a checkbox, selected if triggered, unselected if not triggered. Level. The stop loss level is indicated here. For the logical combination of the tab, just the triggered information is reported because there is no such thing as a level for the whole tab. Data are displayed only when the stop loss exists, that is, when a position is open. If the last trading was a liquidate, the stop loss doesn't exist and no data are displayed. As explained in the intraday trading section of the manual, when an algorithm is true at the threshold, it is so in an interval. This holds for stop-loss algorithms too. There is a whole range or interval where they are triggered. You can watch such intervals in the table by selecting the Intervals checkbox. Intervals are shown both for the single stop-loss algorithms and for the logical combination of the tab. In all cases, they are shown in the threshold instant of time. The colors of the headers and of the background for the logical combination of the tab is determined by the SL button in the combined pane. It is customizable by clicking it.